$87 a barrel. Steve Moore joins us. Look, Steve, the threat of inflation surely comes from a wider war with Iran and a rising price of oil. Where am I going wrong here?
Yeah, you would think so. And, when you look at that $87 a barrel price, let's not forget that, when Trump was president, we had $50 to $60 a barrel oil. So a lot of that is a self-inflicted wound that we have a president who declared war on American energy, and we're paying a high price for it, both in terms of our economy and our national security. We estimate, I think I mentioned this a couple weeks ago on your show, that we estimate that we'd be producing about 3 million more barrels a day in the United States, and that would be an extra $250 million or so every day that instead of flowing to these countries like Iran would be money here at home. So that's been, I think, a factor that's had a very negative effect on the economy. By the way, though, in response to what Jamie Dimon was saying, the Wall Street Journal reported this morning, you may have seen it, Stuart, that there's only one country this year of all the advanced countries that has outperformed expectations. And you know what country that is?
Tell me.
United States.
I figured.
So we've had faster growth than expected. And remember, at the beginning of this year, remember all your Wall Street economist friends said, oh, we're going into a recession. We didn't have one. I think the big problem is, we're growing at least at a positive direction, but not nearly the growth that we need. We need to get back to 3 to 3.5% growth. Under Biden, we've averaged about 1.5% growth. That's not fast enough. And we're never going to bring the debt down with a growth rate that low.
Just, would you mind going back to the price of oil? And just bear with me, speculate with me for a second.
Yep.
A wider war looks distinctly possible. I'm not forecasting it, but it does look a probability, I would say, at this moment. If that happened and the price of oil went to $100 a barrel or more, what impact on inflation? What impact on our economy? Just speculate with me, Steve.
And by the way, that's not a wild speculation at all, Stuart. I mean, I'm surprised the world oil price has not risen more than it has in the last 10 to 12 days. $100 a barrel oil is certainly a very plausible scenario, especially if this war intensifies. And your question almost answers itself, Stuart. If you have $100 a barrel oil, that means the price of just about everything is going to rise, and any progress we've made on inflation in the last 6 months or so would be reversed by that. So energy is the master resource. It's involved in everything that is produced: manufacturing, construction, the internet. All of that uses amazing amounts of energy. So it would mean that inflation, which is now running at about 4%, would probably rise to the 5 to 6% range.
If only our president had not ended America's energy independence on day one of his presidency.
It's amazing because for example, his first act in office was to kill the Keystone XL pipeline, so we couldn't transport it. I don't know if you saw Canada basically said, no, we're going to build everybody's building pipelines in the world except the United States.
Yeah, ridiculous. It really is. But Stephen Moore, you're the voice of reason here. Thanks very much, Steve. We'll see you again real soon. You got it.